Hi, welcome to this episode with Bobby Touran and Founder's Journey. It's our show, and today I got to interview somebody who just not one time founder and CEO of an insurtech company, but two times. And I'm pretty excited about this episode and to have Bobby coming on here. And I'm gonna turn the mic over to him and let him tell his story. How are you doing, Bobby?
Thanks, Jeff. I'm good, and I'm happy to be here with you, and appreciate you having me on the podcast.
I'm on your LinkedIn, and you have a pretty interesting, extensive history career. And I like our audience to understand, how you fell into the world of insurance, and what made you say, I want to start an insurtech company, and give us the storytelling of the history of your background.
Well, like you said, I think you described it correctly that I fell into it very much. I've uh, I've been an entrepreneur, business founder now for more than 15 years. So, like you said, basically my whole career. Generally, always working on building companies that have an engineering team somewhere in the organization. So there's always sort of a software component to what we've been building. I've just always found that to be super interesting. And I think also it has to do with like having lived in Boston, which is where I'm from originally, where there's a lot of great software companies, and then in New York, where there are good companies, and now living in the San Francisco Bay Area. And actually, I moved out to the Bay Area almost 8 years ago to join a software incubator that's focused on financial services, innovating within financial services. And while I was there, I sort of was made aware of and I started to learn about the property and casualty insurance industry, and that's kind of what led me to start my previous company along with my co-founders, which is Pathpoint, which is a digital surplus lines brokerage. And the opportunity there was we just learned that there was ways that purchasing surplus lines insurance could be made more efficient. Surplus lines insurance was becoming a bigger and bigger part of the P&C industry, and so that was an exciting opportunity for us to be kind of building something in the direction that the market was moving. And then about 3 years ago, a little bit more than 3 years ago, I left Pathpoint and started Rainbow in January of 2022. So we just crossed 3 years of running Rainbow, and that's more of an underwriting company. But yeah, to answer your question, the journey, I could never have guessed before I started the previous company that I'd be doing something in specialty insurance, and now I'm building my second specialty insurance company, and I feel very fortunate to say I can't really imagine myself building anything else at this point. I love the industry, and I love the team we have and what we're building. So I feel very fortunate.
So in the past, I have come across Pathpoint quite a few times. We were agency that were appointed by Pathpoint. And there's definitely a huge niche and growing segment on the E&S industry for P&C, personal lines. And now you want to start Rainbow. Can you give us a look back on what made you want to start Rainbow, how the idea came about, and what did you see? What did you see that made you say, aha?
Well, so when we were in the very early days of Pathpoint, um, I was spending a lot of time talking to retail agents, and I was spending a lot of time talking to underwriters. And ultimately, the business, so originally, the business was going to be building software that we sell to wholesale brokers. And what we realized was in order to have the kind of impact we wanted to have, we would have to become a digitally enabled wholesale broker ourselves. We felt like there was the most value to be unlocked by doing that. And in order to do that, we felt like we had to really understand how do both sides of the equation, meaning like the retail agents and the underwriters, think about things so that we could build something that would connect both of them. And I was always interested in both viewpoints, but I was always especially interested in the world of underwriting. I'd always kind of been interested in the specialty program administrators and MGUs that existed within the surplus lines industry. I found it really fascinating that there could be, one or two people that were so focused on a very specific type of risk, and they would build a whole business and they would build a whole livelihood around ensuring that one type of risk. And so that was sort of like a nugget for me that sort of got me thinking initially. And then as I learned more and more about those businesses, I came to appreciate that many of them don't even use much software in their day to day, other than like the critical tools like their email and things like that. And so thinking about how do you take the insurance product side of it and the underwriting side of it and sort of layer in software became sort of like the other big nugget. And sort of those two things coming together are what led me to want to start Rainbow. And Pathpoint at the time was fortunate, and still today is fortunate, to work with lots of great insurance carriers. But what I wanted to do was basically sort of like start from scratch in terms of the underwriting side of things. And so, yeah, that was when the sort of the entrepreneurial bug led me to start Rainbow.
Can you take us back to how'd you pick your team? Like, as a founder of a company, right? You always want to assemble the best possible team. What led to the selection? Who did you think was the best fit? And what's your thesis on how to build the best startup company? And just go through that stage for a second.
Yeah, I completely agree with what you said. I think the team is the most important thing, more important than the problem you're solving, more important than who your investors are. The most important thing is who's your team. And I felt like because I've done this a couple times now, I have pretty good awareness, or I like to think I do, about the things that I don't know if I know everything that I'm good at, but I definitely know the things that I'm not good at. And the number one thing that I don't know how to do is I'm not a software engineer. And so I knew I needed a technical co-founder. So that was the very first step. I was fortunate to get introduced to Shalom, our head of technology, through a friend who's now an investor in our company. And when I first met Shalom, I thought, oh man, there's no way that this really talented engineer is going to want to work on this company with me. But he actually ended up, wanting to do that, and so that was really cool, and it's been a great experience so far. And then my other co-founder was a classmate of mine from college, actually. So I've known him longer than I've known my wife, and longer than I've known a lot of people. But we'd never actually worked together until this business. And so he had been the founder of something else in Canada where he lives. And it was also sort of focused on risk management. And he was trying to understand more about insurance and underwriting. So that was just like a good right place, right time. The three of us are sort of the founders of the company. And then the very next hires that we wanted to make outside of a few engineers to start building the platform were the insurance practitioners on our team. So unlike when I was starting Pathpoint with my team, I actually knew something about insurance this time. And I really liked the idea of having my fellow co-founders being outsiders to the industry, because it allows us to sort of think in a free way about how things could be, not necessarily how they should be. And but yeah, then the next set of key hires were all people with deep MGA underwriting distribution experience. And today, if you look at our company, we have 27 employees. About 10 of us are software engineering and product. And then the other 16, 17 folks, the majority of the company are the insurance team. So it's underwriting, that's customer service, and that's sales. And they're distributed all across the country. And we distribute exclusively through agents, and we work with agents in all the major time zones. And so we need a team that can sort of be there for our agents. And so that's how the organization's grown.
You guys are software focused on better underwriting, better technology through underwriting. What area of underwriting are you guys focused on? Small commercial, middle market, yes, niche. What's the niche? Thank you for watching this video. Now a quick message from our sponsor, Mav.
Thanks, Jeff. I want to let you all in on a secret that top producing agencies don't want you to know about. If you're in P&C insurance, you know firsthand how much you're getting squeezed by your call center. It's becoming less predictable and less economically profitable to scale. But here's the thing. The top producing agencies making over $100 million are not running their leads through a human-based call center. They're running them through an AI expert like Mav to qualify, quote, and hand deliver the highest intent qualified leads to your agents. Mav takes care of the back and forth, having unlimited 24/7 conversations with your leads that are personal and relevant so you can scale to the moon. Ready to ditch your call center and 10x your agency? We're giving the listeners of insurtech's $15,000 worth of credit to try Mav. Head to hiremav.com/insurtechs to claim this offer.
I would say that we are definitely a software company, but I would say that we are also, it's as important that we're an underwriting company. So we talk about being a software enabled underwriting company. We generally speaking only sell the insurance products that we have incubated and developed ourselves with help from actuaries and regulators. The vision for the business and what we've been doing so far is that we've built a quote bind issue system entirely from scratch ourselves. So the whole agent submission experience, the whole policy issuance experience, and the whole underwriting experience that our human underwriters see. And we have human underwriters on our team that receive a subset of the risks. That's all software that we've built ourselves. That's very, very bespoke and fit for purpose. And on top of that software, we distribute these insurance programs that we've developed. So the idea is to be sort of niche focused and have a portfolio of different niche programs that address a meaningful portion of the typical independent agents, commercial, small commercial, middle market commercial P&C book. So the first program is focused on the restaurant industry, very broad appetite for restaurants, high alcohol sales are acceptable. We can write multi-location restaurants. We write them in almost 30 states across the country, including in some very distressed states. The second program is focused on beauty and wellness. So it's like salons, nail salons, hair salons, body piercing studios, even day spas, and then yoga studios, Pilates studios, cycling studios. And again, this is business that our agents have. So the vision for the business from here is to just keep growing the pool of the agents that we want to work with in specific territories, and then making more insurance product available to them all through our platform. So that's kind of the focus and how the business has evolved up to this point, and also how we see it evolving from here.
Nice. So just taking it back, walking back to your storylines. Now you pick out the team who you want to build this with. On LinkedIn, it says you guys have raised $8 million through Series A.
Our Series A was $8 million, and prior to that, we'd raised about $12 million in seed capital. So all in, we've raised about $20 million.
That's incredible. Can you go through the journey of what's the raising process like as a second-time founder versus first time? What's your experience difference between second time doing this versus raising money for the first time, pitching yourself in front of people, Can you walk us through that?
Yeah, so the experience of fundraising definitely depends on the timing when you raise, not just the timing of the company, but the timing in the market. So when we raised our first round of capital, it was in early 2022. It was like about this time, 2022, this time of the year, 2022. So the market was still good. There was a lot of, for those of you that aren't sort of familiar with this, there was like a huge boom in software investing throughout COVID, as more and more businesses were realizing they would have to adapt to a world that was able to be remote. And so for those of you that remember, like Zoom became like one of the most popular, one of the most valuable stocks in the market because more and more people were doing digital phone calls. I think more and more people in insurance realized that, but really in all industries, that there had to be a tech component to their business. And so we were sort of at the very tail end of that period, raising our first round of capital. And definitely being a second-time founder helped. I think a lot of the helping had to do with the fact that I had a sense of what I was doing this time. I was going out to raise capital. Um, and happy to sort of talk about specific examples of that. But and then yeah, we were fortunate to have two really good investors that had invested in me in the past when we started Rainbow. And they're both really good brand names. And so they were sort of a very good signal. We then ended up actually raising more capital later that same year in 2022 because the market overall was starting to get much more difficult to raise capital. And so we wanted to make sure that we were sufficiently stable from a cash perspective. And so we raised a little bit more capital from our existing investors, but then also from a couple net new investors. And then we raised again about a year later. And then we raised again, almost again about a year later. So we've just always been incrementally raising a little bit more money as we feel like the business has become de-risked step after step.
I'm curious, as a founder with your co-founders, what type of who was your mentor in getting advices on valuation, cap tables? I mean, those are not things that they teach in school unless that's what you learn, right? A lot of people learn through the process, but it's always help when you have someone that mentors you or give you advice. Who did you go to? Was there anyone
Yeah.
specific?
That's a really good question. I feel like I'm fortunate in that I had a number of people I went to for advice. Many of them have been founders or VCs themselves, either in the past or at that time that I spoke to them. And so that was really helpful to understand how to think about like the dynamic of the fundraising process. Taking a step back, I think when I first started as a founder in 2010, so we're going way back, there was like way less information online about how to even think about raising money, what that meant. That stuff has come so far, and there's just so much good information available online. And of course, you have to be careful, kind of like what you read and whose advice you follow. But the point is that there's just so much available online right now, and not just from individual people, which I think is valuable, but also like big law firms publish lots of information, and you can use these like trusted sources to give you an initial sense of what you should be thinking about, what you should be aiming for. And then what I found was really helpful is, like I was saying, talking to those people that have kind of been there, done that, and understanding like, okay, everything I read online says to do this. How do you think about that advice? And generally speaking, they would say, yeah, that's good advice. Here are some of the things I would think about. I think that fundraising is a lot like doing sales. It really is like a sales process. You're basically convincing the investor that your company is something that they should be putting their capital into. And you have to convince them not only, it's sort of like a two-part sell. You have to both convince them that you today are really good, that the idea is good, that the leadership team has high integrity, that you're very professional. But then you also have to convince them that the future of the company is very bright, right? Because they're not looking to just get their money back. They're looking to like make money on their investment. And so you have to convince them, not only should you trust me with your money now, I'm going to take your money and I'm going to turn every $1 that you give me to be worth $8 to $10 basically over the next couple of years. And here's how I'm going to do that. And that's really, it's kind of a unique exercise. It's the type of thing that even if you're really good at sales, you're not necessarily going to be good at fundraising. And so kind of to your question, I think it's definitely really helpful to have somebody that's done it before to sort of advise you on how to think about the dynamic as you go into it.
They say 98% of the institution VC-backed company fails, but the 2% that succeed are people who getting 10x, 20x, 50 to 100x return on the initial investment, right? The people that said yes to investing in Bobby and Rainbow, when you had the conversation after the paper is signed, check is deposited, what was the reason why they believe in you and Rainbow idea? They said this is gonna 10x, 50x my money.
I think definitely the two things that I said were true. Like they felt like me as an experienced founder, my team, my co-founders are experienced founders as well. And the leadership team that we have in place was both experienced at building a company, but also experienced at selling insurance, underwriting insurance. Being an insurance startup is a little bit different than just being sort of like a software company that only sells software. In the sense that like having somebody on your team that can enable that service that you provide, insurance as a service, it's a product business, but it's also very much a service business. It's just really important. So I think the early investors felt like the team we had was the right team. So that's one big thing. And then I think the other big thing is the investors shared our vision for the future, right? Like ultimately what my job was to say, hey, the way the world is done today is like this. I think we can all agree that a company that is focused on underwriting or distribution or any part of insurance that's going to be more software enabled is only going to be more likely 1 year from now, 3 years from now, 10 years from now. Basically, what I would say is like, look, in 10 years from now, do you think there's going to be more companies that don't use software or less? And when you ask the question like that, I mean, I think generally most people would say, of course, there's going to be more that use software. And so, I think that's sort of like what I said. And then I said, look, the way that we're going to get there is we're going to be sort of very niche focused. We're going to walk before we run. We're going to, prove our product with agents, make sure that they love it. And then we're going to think about how we scale the business from there. So it wasn't like, oh, we're going to have zero. And then, in 2 minutes, we're going to have, a zillion different things going on. I think that the investors liked that we were thoughtful about how we were going to get to that future position.
Very well said. I'm in the industry, right? Like I go to events, I'm sitting here podcasting with founders. And a lot of times when I sit down with founders and ask them these questions, I try to put myself in both person's shoes, like the founder shoes and the VC shoes. And I can't agree with you more. Like if you are in the insurance industry and you're actually on the front line writing insurance, there needs to be more development on the tools the agents needs on the front line. So, the existing of Rainbow is necessary. So let me ask you a little bit harder question. What's it like to work with carriers trying to build your product?
Well, that is a harder question. I think like a lot of things, it depends. We like to joke internally. That's the most common answer in insurance is it depends. I think it really does depend. Like we're very fortunate. We work with Accelerant. They're our capacity provider. They've been like absolutely awesome to work with in the sense that they're very fast moving and flexible, which is a great fit for an early stage company like us. I can also pick up the phone and call anyone at any level of seniority at that company, and they will always call me back within 24 hours, even if it's on a weekend. So you have, again, for the same reasons that I feel good about Rainbow, I feel really good about Accelerant. Just a very strong team in place. So that's been hugely beneficial for us. Prior to Rainbow, in my previous company, we worked with a number of large, sort of like very traditional, well-known global insurance companies, both from the Lloyd's marketplace, the European marketplace, and then also sort of the US marketplace. And I would say that those companies were all very different from one another. Some were more entrepreneurial, some were more fast moving. When I say entrepreneurial, I mean just sort of like a little bit more open-minded. Some were very fast moving, some were just more traditional. And they said, look, we have this handful of products that we sell. We're really good at selling them. We've been selling them for decades. We feel really comfortable selling this product. And those were good partners too, but just in a different way than the ones that sort of wanted to be more hands-on with us. And I think the other thing I would say about the carriers, which frankly actually is very similar to fundraising, is it's really important to think about the people within the carrier that you are going to work with. And so, you know, people say all the time that insurance is a relationship business, and that's 100% true. And at first, I didn't really fully appreciate all that that meant. I thought it just meant that if you know a lot of people, you're going to have a higher chance of success. And I think that that's true. But, you know, when working with a really big carrier or a small carrier, what's actually much more important is the day-to-day person that you talk to that is going to be your champion within that organization. That is the single biggest determinant of whether or not you are successful with that partner. It's less about, is that the biggest company in the world? Do they have the best loss ratio? Are they the best at paying claims? Those things all matter too. But at the end of the day, and I think those things are especially important for policyholders, but when you're really collaborating with that part of the business, it's just so important that they sort of share your vision, and they're willing to make things happen for you. And I think the way you got to do that is you have to go see them in person. So you talked about going to events. I go to events all the time myself. I love to shake hands with anyone we're working with. I love to find opportunities to spend time with them where it's not just focused on talking about work. So whether that's having dinner or doing some kind of a social or team building activity, those are just so important because you really, especially if you're an underwriting company, you really have to think of the the relationship that you have with the carrier as a partnership. And just like any good partnership, you want to constantly be investing in building that relationship.
While you're on that subject, is there any event that you went to, you get feedback from agent, you're like, aha, that's what we've been missing, and then like, let me go text my product guy or let me go text my CTO and let's put it back into the development. Like, is there sometimes like someone's like, this dish is good, but it's a little bit too sweet, and then you're like, you need to go back to the tweaking it.
All the time. So I would say that nowadays I mostly go to like capacity reinsurance carrier focused events. And I go to maybe like 80% of the events I go to is that, and only 20% of the events that I end up going to are agent events. If you rewind the clock about 12 months, that was almost flipped on its head. Not quite, but it was like I would go to like 60% agent events and 40% carrier events. And yeah, my team was always aware that if I was at one of these events, for sure, I was going to be messaging them things, texting pictures that I drew on a napkin that I had an agent explain to me for feedback to sort of make us better. And no piece of feedback is too small, right? We really do believe that every little thing matters. And so, yeah, I would do that all the time. And frankly, that's one of my favorite parts about building a company is that you get to listen to people and then actually act on the feedback.
On that subject of capacity and reinsurance, the last 48 months, are you noticing a shift?
How so?
The reinsurance market has been getting really expensive, right? Like, so in the personal line market, commercial trucking market, there's a lot of shift in costs in reinsurance. Are you noticing a shift in your side?
So what I hear from people who are way, way more knowledgeable on this topic than I am is that over the last several years, and I think COVID had a lot to do with this, the market has just changed, like the rate environment and the reinsurance, the capacity environment has just gone through these two big swings. So for one period of time, there weren't consistent improvements to pricing. And that's like it happen for a number of reasons. And so then carriers suddenly felt very underwater, no pun intended, and had to make these changes. And so I think the price sort of jumped a lot. So I think that's one thing. I'm honestly very uninformed about what's happening in the personal line space, so I can't even really comment on that. But within commercial, I definitely see that reinsurers think differently about tech-enabled companies. I think it's definitely true that any capacity provider wants to understand how are you going to produce good underwriting results, profitable underwriting results, and it's definitely not enough. Nor would I say it's even a good thing necessarily to say that your competitive advantage is that you make it really easy for agents or insureds to quote and bind. I think that's like a big shift. I think the other thing that capacity providers, they're sort of like in different places on is the idea of being direct to consumer versus distributing through agents. I think agents have always sort of been the main channel for anything commercial insurance. And I think that carriers appreciate today, maybe more than I've only been in the industry for about 8 years, but maybe more than they've ever appreciated just how valuable the role is that's played by agents. And so that's why we've been committed to the agent channel from day one, and we plan to continue to be. But anyway, to answer your question more directly, I think, yes, there's a lot of change, but I think there's just a lot of change in the world, right, Jeff? I mean, you have a world with a lot of political uncertainty, geopolitical uncertainty. You have a world with more catastrophes than ever before. You know, every time there's a new catastrophe, it feels like you also read, this is the biggest catastrophe as ever previously seen. Doesn't matter what the catastrophe is, whether it's a flood, whether it's a tornado, whether it's a wildfire. And I have to believe that these types of things are unfortunately going to continue. And so insurance, and especially reinsurance, just going to play a bigger and bigger role in all that.
I'll leave the political stuff out of the segments,
Yeah.
and just because like it's just so crazy, we don't even know where to start or where to end. But in terms of natural disasters and wildfires and earthquake, and seem like it's been pretty crazy the last 12 months.
Yeah.
And insurance world just reacting to each one and the next one and the next one. I want to get your take on another subject. So I was at InsurTech Connect Vegas last winter, last year. And if you were there, the theme is clear, like AI. Either you jump on the ship, jump on the bandwagon, or you better understand the trend, what's going to leave you behind. Well, whether how early or how late that's impacting insurance, that's a complete different podcast, right? But when people are asking you guys, what's your AI technology? What are you guys doing to delivering AI into your products? What are you saying to them? Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
I was at that ITC, and I would definitely agree with you that all anyone wanted to talk about was AI. I think it's reasonable that that's what people want to talk about, because that's kind of all anybody wants to talk about in the world these days. People ask us how we're using AI. I would say that we use AI in many different parts of our business, but up until now, the engineering effort has really focused more on automation than it has like true AI. It's focused kind of on two things. Number one, building the core software ourselves, because we want to have as much control as possible over the roadmap. We feel that by building the software ourselves, it makes us way more nimble with the technology. And then the second thing is we've focused as much as possible on automation. So we have a pretty lean headcount, and we're always thinking about ways to remove the most time-consuming and frankly annoying tasks that our amazing team has to spend their time on. So whether that's answering common questions that agents have, whether it's triaging risks that are referred into our underwriting queue for one reason or another, whether it's thinking about how we follow up with agents as part of our outreach. We're looking to automate as much as possible as that without losing that human touch. And then on AI, we're still of the belief that the big improvements in AI are going to come from using AI to remove very rote manual tasks that the team is doing. whether that's pre-bind, whether that's post-bind, whether that has to do with appointment process, whether that has to do with how we sell or market into different agencies. That's how we've been thinking a lot about AI. The thing that I would say, though, that I guess to your point about ITC is we have not yet made a big investment in third-party tools, right? Like for us, engineering really starts at the engineering that we do as an organization and the software that we build. And so unless we are building the AI, we have just been like less focused on that as like the most immediate term objective. We think there's tons of opportunity for AI in general and within insurance as a company. But I think we're most focused on just delivering the best experience first and foremost, and then thinking about AI sort of as like a second order thing. If it makes most sense to do that using AI, we'll try to use AI. Otherwise, we don't feel like obligated to use it, if that makes sense.
For 2025, we live in today, delivering value, delivering distribution. Every team meeting that you and your team start, what is the first subject you guys start with?
Every team meeting as a company, what's the first thing that we talk about?
Yeah, the first focus before everything else, priority number one.
Profitability as a company. So we have a company-wide all hands meeting every 2 weeks on Tuesday, and myself and other people at the company present. It's a virtual meeting, and we present kind of what's going on in the business. What were some key wins? What were some key areas for opportunities for learning and improvement? But we're really focused on building. It's really, actually, I would say it's focused on two things. One is profitability from an underwriting perspective. So we want to produce the best loss ratio possible in any class of business that we are underwriting. That's what we talk about as a company all the time. And the other thing is profitability on a cash basis. We don't want to be, it's not a focus of ours to just build the biggest team possible or to have raised the most money possible. We want to create the most value possible. And we think that as an underwriting company, it's just critically important to be thinking about profitability on your balance sheet. We've been thinking about that really since day one of the company. And myself and the co-founders are very aligned on that. And so that's been a nice unifying thing. So those are really the main things. We have underwriting profitability and sort of like cash flow profitability. And we talk about that at first because we think that if we think about everything through that lens, then we can feel very good about everything else that's happening at the company.
We've been going at this podcast for almost an hour now. And if I was a venture capitalist and I deploy my shareholders' money and I put you guys as my portfolio company, I'm going to go ahead and take this copy of this podcast and then just stitch it there. Like, see, this is what we bet our money on. So that was a really good explanation from like the beginning to end, like how your company look at things, how you look at the world, how your team operate together. And, for every founder out there, there's thousands global founders in insurtech these days.
Yeah.
That was one of the better podcasts that I have done. And thank you for coming on the show. And I'd love to get you back on the next 9 to 12 months again, and just to hear the stage that you guys are at, and what are the challenges that you guys are working through. So really appreciate the time that you are spending with us. If you're looking forward to the next 24 months, what do you think will be your biggest challenge that you and your team have to tackle?
Well, first of all, thanks for saying all that. I've really enjoyed being on the podcast too. What are the biggest things that we want to tackle in the next 12 to 24 months? So I think it's a couple of things. Number one, we really want to make other insurance programs available on our platform. We're actively working on that. So like other classes of business, as I was saying. I think as you increase the number of classes of business, you're increasing the different number of points at which something could go wrong. And so, the question is, how do we scale the business, but maintain those things that have really been our competitive advantage so far? Like one of those, I think we do a really good job with customer service and experience. I think that's critically important in any insurance business. Another, I think we've done a really good job from an underwriting perspective. but we're going to have to maintain that. We're going to have to start to maintain that across multiple different programs. We're going to have to also think about sort of like the different ways in which we want to engage agents in the marketplace. Each of these is like not simple at all. And I think what makes it particularly complicated is that there really isn't a perfect answer for any of these things that I just said. It's very much sort of like, you can't be afraid to fail. You have to do by trying, if that makes sense, and finding those little things that work for you, and then, you know, really doubling down on them, and being comfortable moving away from the things that clearly don't serve you as a business. I think those are really challenging, and I don't think we're ever going to solve that. So even if we achieve the things we want to achieve over the next several years as a company, we're always going to be in this mode of figuring things out, trying to get better every day. And yeah, people, you know, since you'd asked about investors too, a lot of investors would ask me kind of like, what is the silver bullet for your business? Like, what's the one thing that if you do that thing, everything else kind of figures itself out? And I'm just of the belief that that doesn't really exist within at least insurance businesses, a business that I'm starting to know better and better. I think like the things that make us really good are just the basic blocking and tackling of running the business. When our agents have a question and they call us, we pick up the phone and we talk to them. When we think about sort of that next product, we try to have conversations with as many smart people as possible and figure out kind of what comes next. So yeah, I don't think this is like a silver bullet industry. I'm pretty skeptical of silver bullets in general as a business person, but yeah, I would say for us, we just have to we have lots of challenging things ahead of us in the next 12 to 24 months. And we have to get them all right in order to do what we want to do.
You know, one day in my next 2, 5, 10 podcasts, where if I'm talking to other VCs, I'm going to drive them back to this podcast on what you just said, the silver bullets and blocking and tackling the basic day-to-day of writing revenues.
Right.
It's so simple, but people tend to make it overcomplicated more than it should be.
So somebody really, 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 really smart on insurance, you know, as the saying goes, that person has forgotten more about insurance than I'll definitely ever know. And with this person, it's like especially true. They made a comment to me once that's always stayed with me, which is that insurance is sold one policy at a time. And I think in the moment, I didn't appreciate just how true that is, how profound a statement that is. But yeah, I mean, you even just saying it reminded me. It's like, you just have to generate premium revenue every day. Try to, you know, stay out of claims every single day. Give agents a good experience every single day. And we operate in such a trust-based business. If people feel like they don't trust you, whether that's carriers with their capacity, whether that's agents with their business, it doesn't matter what else you do. You're just not going to be successful. So, and trust is one of those things that it's, you know, it takes a long time to develop, and it takes very little time to squander. So we're always trying to remind ourselves that, and sort of do what we need to do every day.
So just a quick story. I attended my first, I think it was ITC Vegas, my first ever one. And there was two founders, co-founders to each other, and they were sitting next to me. And they just decided to tell me about their company. They're like, hey, I see you on LinkedIn. You know, this is what we're building. And I questioned them. I was like, so, you know, are you guys a DTC model there? Yeah, you know, our goal is to take the human element out of it. And they were selling, you know, they were basically presenting themselves as an MGA and smart underwriting. And they said our tech's the best tech. And, you know, we're taking the agent out of it. We're going to go direct to consumer. So, you know, I pushed back on it. And 4 years later, you know, today I see them every single day bragging about how we are best friends with the agency community. We're best friends with brokers and agents. We give you the best tool for you to achieve what you want to achieve. Everything of what you just said confirms that. So anyways, Bobby, I appreciate you coming on. And if you have made it through this podcast, make sure you go follow Bobby on LinkedIn. And I'm going to put a link below of our podcast and also how you can follow them. So Thank you very much for coming on.
It was a lot of fun, Jeff. Thanks for having me.